surgery.
So, morning.
Hello, good morning. Good to see you. How's it going?
How you doing? Good to see you. Hello. Oh, sorry. Morning. Yeah. Have you got a plug? Yeah.
Look nice. Look nice, but I think I photo of the person. So I made mistake.
Okay. So. We have to set up the stream.
I started stream, what?
You've started the stream, but I've got to put it onto the. You've got to send me the stream link, or to Torsten. Hi there. Good to see you. Let me just jump in here a second. Morning. How you doing? Morning. Very good, thank you. Okay, great, thank you.
If you act like an advisor, how to make an office efficient, and you come inside the office and the advisor and you look like, okay, this office was, this is
So this office was really one of
we tried to do some downsizing, but actually it was not very much efficient. Conference rooms and workspace. And then we thought that makes sense because we fit out shop. So we stayed in the which is quite good with our real estate team. I was there during the past 2 years.
I think it depends on the nature of the business and the function. And they use a lot of systems related to the hub. And the moves the hub reduce space by 30% and created fixable tests. But still like a department for specific areas, but you had to basically get much less tests and make it more from modern concrete office, gym in the office, massage room, shit like that. And then that office.
Okay, so Eric, you've sent me one, have you?
It was supposed to open in February, this became like later. And some functions like renovations, they continue to work from home. But most other functions, have some artists there.
Do you need our assistance with anything else?
No, that's good. I think the only thing I need is a collier's pen. Yeah.
College pen. Okay, no worries.
Well, no, I can use my own pen.
I will get you one.
Okay, how did you send me the embed code?
Email?
Email, okay. Okay. Yeah, I've got it. Hello, how you doing? Let me just put this embed code in. Happy New Year, yes.
Das ist der hier. Da können wir fast den Grund pegeln, die sind recht hoch.
Okay, so this should be right now.
Jedenfalls, tak, 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 tak. Pam, 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 pam. Tak, tak, tak.
It's very unique. I did very well in those.
Hello, how you doing?
Yeah, good, good. You?
Good, very good.
Yeah. Prepared?
Good start, yeah, prepared now.
Shoot, question.
Yeah, no, so all prepared.
They promised to have a new office by now.
I know they did, but we're actually here a bit earlier. Last year we were
Not
here
their
on...
fault.
Not entirely their fault, no. Last time they did promise they'd be in a new office.
Yeah, I remember.
But last year it was February the 14th. Or 15th or something like that. So we're almost a whole month earlier. So that's why I said if we'd have been the same time. I know it looks as though I've got a very hairy chest.
So you're just too old.
Yeah,
too
just
old. Like, it's easier, you know.
Yeah, a little.
For the ladies, for like there's testosterone. You know.
Exactly. It's because the IT have already taken the sound system out.
They are moving already.
So luckily we've got small microphones for the speakers, so we can...
As a backup, yeah.
As a backup, yeah.
Always happens.
Because otherwise the camera, we can do it for the room, but otherwise for the camera it wouldn't work at all if there's...
Because you do post-production as well, right? You put it online, as you remember?
Yeah,
you do.
so we put it online, yeah.
Do you cut it in clips as well?
We haven't done so far.
Let me do it for you. I did it for one of the business meets here. I love the process myself.
Did you?
So much so that I'm now looking for a digital or social media whatever manager for us.
Oh, are you?
Yes. Let's do it.
Ah, perfect. There we go.
Hi, Alex. Yeah, good to see you. Yeah, thank you. Same.
Oh yeah, that's a very good Collier's pen.
That's a dangerous tool, you know, dangerous arm, how to say, weapon, yes.
Weapon.
You can sign a firing contract or sign
with this one, yeah.
or something. You know, it's like this exercise, sell this pen,
Yeah.
Interesting, yes, yeah, I'm honest. Like I'm going with this Svetlana, you know Svetlana?
Yeah.
In London.
Yeah.
And so I say, let's do short interviews. She's like, yeah, fine. Short interviews, then you bring it to some tool, it clips the long form into short form. Doing the AI.
So that's an AI, right,
yeah,
okay.
AI magic. So basically like piecing together relevant content in a 1-2 minute clips. Amazing stuff.
So, but I guess you have to make sure, is it listening to it or is it using subtitles? How does it work out
extracting, so transcribing, extracting the text and then piecing together text space, but then what you see the outcome is the actual video with normal, like synchronized audio and so on.
Well, that would save a lot of time. That's quite exciting.
I'm expensive, but hire me.
Okay. Okay.
Wait, what do you do in February 12th? On February 12th? I mean, as a company event and so on.
February the 11th, we're in London doing a global outlook.
On 12th, there's an Italian RICS conference. And we've been putting together a mixer for the evening because they don't have any event for the evening. So I just thought, why not? You know.
Right.
So reaching out to them as well. So lots of big cheese, how to say, movers and shakers, you know, in Italy.
In Italy on the 12th.
In Milan. Yeah.
Okay. Well, drop me a note about that because Torsten might potentially go to that.
Yes, Torsten. I met him in Milan last time.
Yeah.
We were there.
Yeah, that would be good.
Okay. Great to see you.
Great to see you too.
How are you?
Yeah, thank you. Yeah, good.
Yeah.
Good. Yeah. I think so we don't have sound.
I've heard about it. Okay, so we have to speak.
So we'll have to
just volume up a little.
Just volume, yeah. So we just push it a little bit.
I'm a little bit afraid because the room is like long, not wide.
Yeah. So we'll have to encourage everybody to come forward.
Mm-hmm. Exactly. That would be the best.
And I think, and then there's not. That's all we can really do.
Yes.
So, I mean.
Yeah, I hope it's fine.
I think it'll be fine. I'll explain at the beginning that this is. And so I've got one of these, and Eric here. Eric, this is Gregor's, who is on the presentation with me. So he's doing the first part.
Okay, wireless, convenient.
Well, it just means that then if we film it, normally we take the sound from the sound system.
Okay.
But because there isn't a sound system, we'll record it.
Okay, with this one.
With this one, and then otherwise it would sound very, very rude. Richard, how are you doing? Yeah, all good. Yeah, how are you?
Looking forward. Nice. I like doing something when I'm not involved. You know.
Yes.
How's it going for you?
Yeah, good. Good.
Masz już tą prezentację?
So,
tylko wiesz co, mogę, bo tam jedno chciałem dodać w swoim.
How do I pronounce that?
To jest ten...
Grzegorz.
Exactly.
Okay.
Od razu po wstępie.
Silewicz.
Nie, wcześniej przed.
Very good.
A nie, czekaj, to jest ogólnie. Dobra, bo myślałem, że to jest o panelu.
Grzegorz.
To dalej. to też jakiś organizacyjny. Zaczyna się tak od zdjęcia Warszawy.
Okej. Grzegorz.
Będzie i wiesz co dalej? Jeszcze tam dam kilka slajdów, jakiś szósty, tam siódmy, tak spokojnie jeszcze.
I have to check English,
Jeszcze.
Yeah.
O, tutaj. Wiesz co?
Okay.
Te linie, żeby były widać, czyli tam...
Okay, Justina's not here.
Wiesz, czas, nie?
How do you pronounce that? Flay? I'll ask him anyway.
W designie może?
Dorota Wysokinska-Kuzdra. Fine. That's good. Piotr I know anyway. Mirowski, that's all right.
Wiesz, tak jak jest tam add chart, nie? Żeby dodać dodatkowe... add chart.
Alexandra Trojanowska.
Data labels.
Yes.
Czekaj, nie data labels, które to są? Axis labels.
Schnick. Agnieszka Schnick.
Tam co było wcześniej?
No idea.
Ale nie, to są zwykłe. A mi...
Joost Lindertse was how that was
dobra,
pronounced.
czyli
I know that one. Right, so...
To zniknęło. Czekaj, to weź cofnij, bo to... A dobra. Wiesz o co mi chodzi?
Yes.
O, grid lines, tak.
Yeah, so I'll
Primary,
flag
major,
up
horizontal.
the CEE summit as well in the beginning.
Dokładnie, bo tu żeby wiesz, było widać, nie, jak to idzie. I wiesz co, jeszcze tu jakbyśmy
yeah. Morning.
pisał przed 2019.
Hello, how are you doing?
And thank you for the invitation.
Yeah, no pleasure, good to see you.
I'm good. Everything's fine.
O, super,
So
dzięki.
it's nice that,
How is the lending market here?
well, generally speaking, the previous year was excellent.
Oh, really?
I
Okay.
think for us it was great. We were operating, in offices, in PRSs, in logistics. So generally speaking, we can't complain.
Okay.
But as it is that you squeeze, the lemon,
Yeah.
probably this one might be a bit difficult.
Okay. Okay.
But we'll see.
We'll see. Dorota, how are you doing? Happy New Year.
Hello.
All good?
No dobrze, już mikrofon dostałem, więc już mam ten, mogę sobie przypudrować nosek.
But good. I think, it should be better than last year.
Jedyne co to z nagłośnieniem podobno nie będzie.
Although if last year was good for you.
Yeah, well, but it's sometimes like this.
Yeah.
Nie ma nagłośnienia. Coś tam nie
But-
wiem, co to technicznie.
Yes, so out of these, I think this will be
No
more
trochę szkoda, bo sala
positive
jest
than
taka
the
duża,
German
jakby
one.
na przykład szeroka, wtedy
The French one was
łatwiej
quite
głos się
positive.
roznosi. A tutaj jest...
At least what I heard, last year, all
Z Richardem rozmawiałem, to powiedział, że zachęci ludzi, żeby jak najbliżej przychodzili.
Yes.
the German investors, they were saying,
No dać radę.
we are trying to pick, the cherries, and we are not in a rush.
No tak, że już jesteśmy, nie?
That was the general comment.
Yeah, and I think that's probably right. I think that is probably a fair comment. Hello. Hi.
Ola Karczewska, Capital Market.
Hi. Good to see you in person. Yeah.
It's not only me.
Yeah.
Dzień dobry, czegoś się
Dzień dobry. Także fajnie, że jesteś z nami.
Good.
Też się cieszę,
So all-
mam nadzieję, że się przydam.
Go through my topics and wrap up and let's go some to have some
Ja
Exactly.
chętnie będę się
So,
dzielił, więc jak cokolwiek tylko Ci jest potrzebne.
No po prostu, pięknie.
So I'll start in that with sorry.
Ale jesteś pod wrażeniem, więc rzeczywiście
has to go
super.
at 11. So I've suggested he starts and says, because what he's going to say is he would like there to be more challenging regulation, not less. So I thought, okay, interesting. That's an interesting start.
Za chwilę.
I wanted to calm down a little bit.
And then, well, then that leads into your view on it, I think. So then we cover exactly that, which is the perspectives on 2024. So exactly what we said, really. Then I'll come to Agnieszka, circularity. Then Joost on decarbonisation. And then I've got some things that we can pick up on, but it'll really just go from there.
Let's see what's the timing.
Yeah. And then Alexandra was going to talk a little bit about the differences between CEE and other parts. And then her area is obviously the energy side as well.
ESG reporting.
ESG reporting. Okay. She was interested to talk to Joost about the energy transition part. So I said, okay, that's fine. And then Anna's got some views from the floor as well from Invesco. So I think we just let it go. And I've got some prompts if we need to, and obviously I've got here your different parts that you mentioned. So
yeah, but I would like to focus on how it went in 24.
Yes.
And what's going to happen in 25th.
Yes, fine, and that's good.
And we don't have to cover the rest.
Fine. If we do cover it. Joost, how are you doing? Good to see you. Morning.
How are you? Good.
Good.
So, Isabella is with you.
Yeah.
On the sustainability one. So.
Yeah. We are fighting on the same side.
Good fighter. I think you too.
I'm totally exhausted on this fight. You know, it's like hitting your wall or something.
Yeah. No, people do not understand. There is no IR on ISG. You have to do it. Otherwise, what is the useless of the building when there is no work?
When I was in Expo, I once said to my client, "Sorry, I'm from here."
Yeah.
They are exhausted on this topic, overwhelmed with it.
Because there's so many wrong advice. There's so many people who are greediness thought, oh, it's easy, I can make money. Yeah. And if you see it right, yeah.
It's all clear, I don't need to know anything more.
No, it's better if you don't, Dorota.
Morning. Yeah, that's Joost Levensen.
So you are in the same panel?
Yeah, we are in the same.
Yes.
I'm in the...
So Dorota is in the first panel, and I think you and Piotr are doing a welcome.
Yes, that's correct.
Is it both of you? As a
Great to see you. How are you?
Okay, that's good because that's what I've put on the slide. So
Yes. I give a grant to you, and then you go into details, the most interesting.
And so,
and you know, I will refer a little bit to Germany. I wanted to warn you.
You will refer?
Yes. But
I haven't seen
economy of Germany.
When you
Yeah,
come to when you come to the closest.
It's also easier.
okay. Good to know. So what time is she coming?
It is
She
still.
said she will be even around 9:30, close to 10.
Oh, fine. Okay, good. All right. And I haven't seen Agnieszka yet. And I don't have Soren is here yet.
But Soren is Digitalization.
He's going to do a question from the floor.
That's how you do it.
Yeah. But I haven't seen it. Oh, yes. Yes, the other side with the Collier's Cup.
Subsidized. The Collier's Cup.
Yeah, with the Collier's Cup. Fine. Okay. I'll just go and
go.
check in.
Yeah, it brings effects.
Oh, sorry.
Do you have a microphone?
Yes, you will. You will. Because they've not got, because the sound system is already gone.
Okay.
So these are for the camera more than they are for the. So, but yes, let me do that. Let me find Eric the cameraman.
I saw you look also professional. So
Very good. Up for the panel, Richard.
Yeah, very good. And I'm glad to see, we're all wearing ties.
Oh, yes, exactly. Really allergic.
From the beginning of the year, I would say every day.
I almost didn't find your office. I didn't sign a sign. I was
everything
for hours.
It's moving.
Everything we're moving, so it's like it's glad that we all got here because it's, the office will be gone in 2 weeks. We will be switching locations.
Yeah, because last year we did it in the middle of February.
Yes.
So I remember us saying that it will be in a different office next year.
Well,
and it would have been. It would have been if we didn't do it a month earlier.
It would have been. So it's really like the closing time.
Yeah.
But I'm really glad to move. I mean,
Yeah,
20 years in one spot.
Yeah.
You know, you bound to change
Well,
things
and it was a
every year.
super cool building when it opened, wasn't it?
Oh, it's
I mean,
the
I
best,
remember
yeah.
this being
This
a
one's
real.
awesome, yeah.
But they changed now with the amenities.
They're trying.
Definitely, you're right, because if that's investment, that's the leverage for future, right? It will bring effects, it will bring fruits.
Yeah.
I think it took them a few years to negotiate any change because we allow
None.
None, but there will be some
Yeah.
changes. So, but for us, it was just too late. Yeah. Plus, every now and again, it's good to move.
Yeah.
So next year, it's going to be in a different spot.
Quick question to you, Fabian, is how do I pronounce that?
FLE.
Okay, fine. Because I had people saying flair to me, and I was going, that sounds a bit odd. But
Doesn't stand for anything.
Yes, HPI Europe, so that we are part of the HPI Europe.
Okay, gotcha.
Ah, okay.
Unfortunately, the F is not for father.
Not yet. Yeah, not yet. Yeah.
It is coming.
It will be.
Yeah, I'm sure it will be. So the glass will be half full on the panel?
Yeah. It would be really beneficial. Right.
Yeah.
We are buying.
And what are your views?
Yeah.
Yeah. Because I
Which is a
honestly,
good
I have
message.
not followed the recent polls.
Let me just check Soren, because he's going to do a
AFD
quick
still
question
gaining support
from the floor
right
to
now.
start the sustainability one.
Wow, okay. That's punchy.
So long as, yeah, well, you know,
And in
let's
terms
start
of,
as...
in terms of introductions and everything, we're good. That's what Dorothy's going to say hi.
We're
or-
good.
Yeah?
Yeah. So it's you and Dorota, I think. You're doing a quick welcome.
Uh-huh.
I'll open, pass over to you.
All right, sounds good.
Yeah, that's good. Sorry, how are you doing?
I'm well.
Good. So I'll come to you when we start the sustainability one, just for a quick, for exactly that punchy start.
Yes. Okay.
That'll be good.
What are your expectations?
Exactly. You know,
They're very limited, Soren, so you can't disappoint.
Germany. Even here in the region, like
no, I
Romania,
think just that
we have something
because you
similar.
mentioned you would, you had a view that there should be more regulation driving this rather than less, and I think that's an interesting starting point for a discussion. So let's start with that and surprise everybody.
In Eurozone, I mean in Western Europe, when we would be talking about it, I don't know.
So
15
that
years ago,
that will be at
probably
10:45. So that's why I'll do you first straight away, and then you can head
There
off.
was no political
Because you've got to go at 11.
Right now it became so important that it really shapes not only the economic situation, but overall what is on the market.
So yes, so that's what I thought. And if there's a delay in it, then don't just flag to me that you've left.
Sure.
And then I won't have an embarrassing Soren. But yes, so that's what I thought.
If I need to leave, then I will try to just wait.
Yeah, fine.
But
Brilliant.
it should be fine. I can send a text if it drags like 10 minutes.
Yeah, fine. Yeah. Okay. Perfect. Very good.
Are we starting like 9:30 sharp or?
I think we probably should to get done in time, really.
Too easy.
So, yeah, so I think we should try to start to keep it on time, really, if we can.
And then sometimes they get comfortable on the subsidy.
And the thing is, they get the lower subsidy, they get the higher one. So this means that a family coming, a mother with 2 kids,
Okay, shall we encourage people to...
I have to return at least.
Hello, how are you doing? Oh, you...
Yeah, so it could be on the same level,
good.
right?
Good to see you. So, that's all right. So, all relaxed. The first part anyway, there's going to be presentation, then a panel on the capital markets side, and then we'll do the ESG and sustainability. Yeah. So, you can relax. Yes, absolutely. You can say whatever you like.
And this is also coming back indeed to political side, because that's why also AFD is
I think we're
gaining
going to
support,
start.
because people are just mad about
Why
it.
not?
Yeah, there
Why
is a
not?
social discontent coming with that.
We're going to start, guys. So you can take coffees with you, and
in which direction? Because
we're going to start, guys, and the sound system has unfortunately already been moved, which means we'll have to all be, so don't hang at the back, is what I'm saying. How you doing? Good to see you. We're going to start, guys. Hello, how are you?
Oh, all the best.
Happy New Year.
Yes, and good luck.
Thank you. We're going to start, guys, so we're going to start, so just to let you know we're going to start, so there's no sound system, so don't hide at the back is all I can tell you.
Interesting times.
Oh yeah, we're going to start, so we're going to start, guys, so just to let you know, but you can tell, hello, how are you doing? Hi there. We're going to start, guys, so
what is the right way to...
Right, great. So you've got one.
Yeah. Should I be from the very beginning on the chair, or you have?
No,
Okay.
because there's going to be Piotr and Dorota will do a quick.
So first I will sit here,
So-
and then when our part starts.
Yeah, exactly.
What you prefer? I sit on the left, on the right.
If you sit in the pink chair.
In the pink, okay.
Because then when you're looking at me, you'll be on camera.
Okay.
So.
Okay. Pink fits me well.
sitting here.
Yeah, exactly. If you want, Eric Thomas is on the panel.
Yes.
So if you've got you can give him a microphone.
Now is on the panel. No.
Well, no. Now is. Should I say
We must change.
Grzegorz?
Yes.
Is that the correct pronunciation?
Perfect. Really, 100% perfect.
I know I've been doing Grzegorz, but but Grzegorz is better, isn't it?
Yeah. It is perfect.
Maybe take it when he's on.
Oh, okay, fine.
Piotr Mirowski would be happy to have a video interview,
Okay.
but he has time only till 11:30. So we should do it just after we finish the...
We're seeing the thing. Okay, great. Fabian, so just, this is Eric, who is the cameraman. He will have a microphone for you.
No to rzeczywiście nie zwłaszcza, że był czas, tak jak mówię, listopada.
Ready?
To nie jest chwila, nie? W ostatniej chwili. Tak.
How are we doing for time? Oh, well, that isn't bad, actually.
That's busy.
Very busy, yeah.
Yeah. See you. Later.
This is Joost, by the way, Agnieszka, who is also on your panel, and Isabella. Okay, shall we?
Yes.
So when we get rid of the chairs and do
Yes,
the...
we adjourn then we just adjourn the...
Will I
for
do
the
that?
panel. I will help you.
You'll help, okay, great.
Richard, I will manage water for us if our discussion is too hot.
Oh, perfect, thank you, yeah.
We need to change the presentation.
Oh, okay. It doesn't matter. Yeah, it doesn't matter too much. That's fine, and then we've got...
Tak?
Yeah.
Bo ja mam takie samo nazwisko jak Pada.
Aha.
Bardzo rzadko
Zdarza się bardzo rzadko, tak?
Good morning, everybody.
Grzegorz.
Thanks very much for joining us. Fantastic to be back in Warsaw. The intriguing thing is, last year, this event was held on February the 14th, I think, and we said that it would be in a new office next time it was held. However, we've moved it from February to January. So actually, we're not in a new office, but there will be shortly in a new office in Colliers. But one of the things about being slightly earlier is that a lot of the IT has already left the building, going to the new building, which means there is no sound system. So bear with us. If you can't hear me at the back, let me know. And if you can't at any point hear the speakers, either come forward or let us know, and we'll try and make that work for everybody. And it's designed to be interactive, and I'm already doing my welcome now, which I shouldn't be doing, because I'm going to hand over to Piotr and Dorota. But firstly, I would like to also say thanks very much to Jan, Anna and Olaf for the hosting here at Collier's. Great to be back again, and look forward to being in the new office this time next year, which will be great. And because we're all here together, I think we should give a big round of applause to Piotr and Dorota. Thank you.
All right, very good morning to everyone. I'm sorry for the lack of a microphone, but I hope you can hear us well. Very much welcome to our office, to our old office. As Richard said, the next event will be in the new office. We are moving in 2 weeks' time, so this is really like the last event here. So please enjoy still our great premises. Really happy to see you here, and I hope you will also enjoy today's outlook, which will hopefully give you a kind of good insight into what's next.
Yeah, well, good morning everyone. We are delighted to have you here. We hope that this outlook will really set the tone for a robust 2025, and that you'll spend the morning in a really enjoyable and informative atmosphere. We've got superb panelists coming up, and hopefully they'll fill you with confidence and insights as to what we can look forward to in 2025. Welcome, thank you.
Great, thank you guys. Thanks very much. So the order of the day is there's going to be 2 sessions. We're going to first of all focus on the investment outlook, and then because we're looking at key trends, we're also going to drill down into decarbonisation, what that means for everybody here in the room, and also pick up on what else is happening in the rest of Europe and how that's playing out or likely to play out in CEE as one of the kind of big trends over the year. So this is how we'll run it. There's going to be a fireside chat shortly with Grzegorz, so we'll be able to pick that up, look through some of the macro trends, see what's driving the market. Then we'll pick up the investment outlook. Then we'll look at decarbonisation, and then there'll be time for coffee and networking afterwards so that you can pick up on any questions. The idea is it's designed to be interactive, so if you've got questions, if you've got thoughts, please do bring them, because the more we share, the more we're going to then be able to benefit from it. And I will also share what we've picked up already at these sessions that we've had in London and Paris, and I'll take what you say here also to the global outlook that we're doing in London on the 11th of February. So I'm looking forward to hearing the view. I can already tell you that it was probably as miserable as could be in Germany, much more positive in Paris, and I have a feeling it's going to be more positive here as well. So let's see if I'm right. For those who don't know me, I'm Richard Betts, head of content and founder at Real Asset Media, co-founder. I'm not going to spend too much time on this because we've got so much to get on with, but we publish a lot of magazines, Real FDI, Living Retail, also Impact, which is designed to support the transition, and it'll be interesting to see the views from here, because we'll also pick that up in the next issue of Impact, which will be at MIPIM. For those who don't know, we also run the Expo Day. We're very keen to work with the industry, and so we deliberately create initiatives to support activity in the industry. One of those is the CEE Summit, which we've been running for 11 years. Richard, you're somewhere here, are you? Richard Stevens? Yes. 11, is it 11? Is this the 11th or the 12th? Okay, 11 years. And that's designed to bring international investors to the CEE and talk about what's happening in the markets here. So if you're interested in that, please do talk to Richard or me, because that will be back in Warsaw in June. We run the International Investors Lounge and also work with EPRA and Transport and Logistics. So we aim to be across the market, really. For those who are getting older, like me, we are also supporting the Senior Housing and Healthcare Association, because that, again, is one of the growing areas where we see an opportunity, but also a lack of transparency across Europe, and we see that as an area that can definitely evolve across Europe, including in these markets here. So let's start now, Grzegorz, with you. If you take a seat, and we're going to run through this, and if there's any, we can stop and pick it up as we go along, or we can pick it up in the conversation afterwards. But Grzegorz, let's start. If I hand you that, because I know you've got some slides to share. So maybe let's just start, I suppose, with how you see the macro picture, and I guess what's driving that for CEE. So how are you seeing that for 2025?
Well, first of all, good morning, ladies and gentlemen. Thanks a lot that you dedicated this morning for us, for our conference. We hope you'll find it really interesting. Well, Richard, answering your question, I think we have full glasses of water here, not half full, but completely full. And as Piotr already said regarding robust activity, I think that it's worth to say we have to be brave, although I think we hear in media, we read in articles that there are lots of challenges. Indeed, there are, but also that also is some kind of challenge, but opportunity also here for Poland and for the region. And I think we can say that, one picture is worth 1,000 of words, yeah? And this is what behind us is actually GDP growth. Those are our recent forecasts, Collier's forecast that we just updated recently. We put here also 2023 as a comparison to remind you how difficult year it was in terms of the economic activity. Overall, in Central Eastern Europe, in Western Europe as well, but if we focus on Poland, as you can see, it was just 0.1%, so nearly stagnation. With the exception of the pandemic recession, that was the lowest growth in this decade. So even the global financial crisis, then we had a growth in Poland, GDP growth above 2%. Even when we had double-dip recession in Eurozone, also that was better. Why was that? I'm sure you remember. Inflation increased a lot here. We had a double-digit inflation, close to 20%, especially in the first quarter of 2023. And actually, that was really harmful for the main part of our economy. So the household consumption. We are a big economy with lots of number of inhabitants, and still the household consumption stands for about nearly 60% of nominal GDP. That's a lot, right? Of course, more to that, we had some destocking process because previously there was overstocking process that also made a difference. But of course, we will not talk about 2023. It's a long history. What we have right now, as you can see, finally in 2024, the Polish economy and the Central Eastern European economies accelerated. Perhaps acceleration is not the right word, improved. Our estimate, because we do not still have final figures for Poland, this should be 2.8%, but next year it will be better, 3.5%. And as you can see also behind my back, the Polish economy will be the one that will grow the strongest among those 6 CEE economies. Also, as you can see, stronger than the average. However, I would say for other ones, it's also not bad. Yeah, they're coming back to growth rates that have not been seen in those previous 2 years. So I think from this point of view, it's really worth to answer the question, why is that, right? What will be the driver for 2025, as we would like to somehow set a stage here for the further discussion. So what from this macroeconomic outlook will be the drivers? And here, of course, we have the household consumption. That is the driver to growth that started to be actually already driver to growth late 2023, then in 2024. We have really good situation on the labor market. You can see that with unemployment rates. Here Poland is with the red line, but also in other countries. It's not anymore. But by the way, this is the unemployment rates published by Eurostat. So if you are more familiar, if you use more registered rate published by the local statistical office, is higher. Just a difference of methodology, but even in case of the domestic methodology, the chart for Poland would look roughly the same. So 10 years ago, unemployment rate in Poland was above 10%. And I remember lots of meetings that I was talking, okay, right now is a time of improvement of the labor market. We will have labor shortages. Not so many people believed in that. They said, okay, still unemployment, this is what we have on the labor market, will be really a challenge for Poland. But as you can see, from unemployment rates, it's low. It's depending on the seasonal effect, but we can say it's around all-time lows. And as I said, this is also the story for other countries, and this is also the result, the outcome that comes for the economy. And here you have the high-frequency indicators on the left-hand side. I don't know why those colors became the same one. Sorry for that. Yesterday they were different, but basically this is this way. This line is retail sales. The bottom line stands for industrial production. So just I wanted to give you this reference, this conclusion on that once, as I said, the household consumption is doing relatively good, it is also the driver for the economic activity. And as you can see from the beginning of last year, it's positive. There are some ups and downs. Also, we had floods in September here in Poland and so on. So that's why it was going down. This is the CEE average, but GDP-weighted average, so Poland has a strong impact on that. But what's my conclusion on that? If you have retail sales going up and if you have industrial production that is not performing so good, the latter is strongly dependent on external markets because we are involved in lots of supply chains. Our exports also include lots of industrial components or also final goods. And we have months that they are better. There are some contracts, there's better performance, but as you can see, it's kind of fluctuation here. And again, the conclusion is that household consumption is doing better. And is it going to be the same? Well, in terms of the household consumption, indeed, it will be the driver of growth for GDP here in Poland and also in other Central and Eastern European countries. We have still, I would say, good situation on the labor market, but good for employees. For households, of course, growth of wages is something that they do not appreciate. Actually, this is something that in the operational costs is getting much more and more. And that's why also last year in Poland we had a drop of margins quite significant because those costs increased. But for 2025, I would expect that these lines for wage growth will not be accelerating more. Well, they will not, as I said, it will not be accelerating, so they will be positive. Why is that? First of all, it seems that the pressure for further increases of wages is slowing down. It's that, especially I think that the conclusion from this slide, because here finally there are good colors. So nominal wage growth, this is the green line. So this, what is basically in terms of wage growth. This dark one stands for real one, so concluding inflation. And once inflation dropped and real wages went up, that also makes that households, or rather employees, are not demanding so much higher wages. And whereas average wage growth in 2024 I estimate to be around 12% year over year, 12.4 exactly, I expect that next year it will be something like 8.5. A kind of relief for companies, not completely, because that will be, again, higher wages, but also it puts that this labor market is not as much overheating as previously. It's a little bit coming to the normal, and I think the latest data released for Q4 already showed that in some sectors, companies' margins, they do not have anymore such a strong pressure. What I think is also good, not only from the point of view of households supporting the economy or rather driving the economy, but also from the point of view of companies that they can at least feel a little bit more comfortable with that, not only thinking about that if I should increase prices, but on the other hand, I shouldn't because the competition is high, and also they were afraid regarding this demand. Is demand or really came back, or perhaps consumers are too price sensitive, and any increase of prices will make that this demand could drop again.
And Grzegorz, obviously for the real estate side, interest rates play a big role here. So I suppose what are you seeing I guess both macro across Europe, but also here in Poland for that?
Well, first of all, I think we have a good part of the time or good environment to decrease interest rates because, as I said, inflation, double-digit inflation is no longer with us, luckily. Those increases that we had, especially in 2023 and late 2022, you know the reasons perfectly. That was the higher prices of energy, especially when Russia invaded Ukraine. All prices of those energy commodities increased, but also other agricultural commodities, some components, because Russia and Ukraine is also a producer of different raw materials, aluminum, like in the case of Ukraine. So that made those increases really high. Right now, and we have a chart on that, you can see that this really huge difference. Of course, we touched even inflation targets, what was really great, and central banks started to decrease interest rates. What we have recently, in some countries, we have an uptick of inflation, but really, I would say not just so big like it was previously. In Poland, we had a partial unfreezing of energy prices. It was expected since the middle of the year. You see this red line for Poland that indeed it started to increase, and still it is on those higher levels. I expect that in 2025 it will be, because we also have some other measures coming in. But it should drop again since the second half of the year, because a year before we had this also the first stage of partial unfreezing of energy prices, so at least the statistical base effect will work here. And finally, to your question regarding interest rates. It's this way that central banks in Central Eastern Europe, those non-Eurozone ones, so here on the chart you have four of them, or it would be also fair to put Bulgaria here, but Bulgaria is closely following what the ECB does, so it does not make so much sense. My point here is that first of all, Polish Central Bank was the first one to decrease interest rates. That was September 2023. Quite early, because there were different opinions if that's not too early. But as you can see, after those two moves, there's nothing. Although other did interest rate cuts. The most active, I think, is the Czech Republic one. But the Czech Central Bank is very sensitive to inflation levels. If it goes up just 1 month, just a little bit, it usually considers to change interest rates. If it goes down, also they consider if another monetary policy would be more relevant here. What's next here? I think in terms of Poland, the official, and I'm sure you heard about it, the official information coming from the governor of our central bank is that probably we will see the drop of interest rates, cuts of interest rates in 2026. My view is that it could be earlier, it could be this year, and this is also what comes from some communication coming from different monetary policy members that they see, and I agree with that this inflation pressure is not so strong. Those administrative prices, so that we have still freezing, and it will be unfreezing of energy prices, it has an impact. Also that we Polish people pay more for energy, for water, for waste, and so on. That, of course, makes that the inflation here was, it has an impact, a strong impact on inflation. But here, regarding the future outcome, that what we can expect, I think that the central bank, or rather more monetary policy members, they wait for the projection of inflation that will be prepared in March. And in my view, it will show that this pressure indeed is slowing down. I think that even second quarter, or perhaps middle of the year, this year could be the time when they start a slight decrease, slight cut of interest rates. But I think, like when you would ask analysts, when you would ask economists, there are really different views, and this is indeed quite uncertainty coming from here. But I think like this scenario of cutting interest rates in the second quarter is feasible, depending on that what will be coming from updated inflation projections. So we have to wait something like 2 months for that. Here, of course, other banks, not sure if you are interested, but of course they continued. They stopped a little bit in Central and Eastern Europe. Like, for example, the Hungarian bank is concerned a lot regarding foreign exchange reserve because it depreciated, so it makes cost of imports higher. So that's why they stopped a little bit, but the intention is that to continue. Also yesterday, the Romanian Central Bank kept the interest rates at the same level, and there was important information in the communication coming from the Romanian Central Bank that they explained the economic environment, domestic environment, but they also said that crucial for us, for them, is what will the US Fed and the ECB, what they are going to do. And that's also very relevant for other central banks in the region. And as you can see, this path, again with colors, sorry for that, unless those are my eyes that cannot see those colors.
There is, but there are color differences. I can see that.
Yeah.
And also we will be able to share these afterwards. So don't feel that you need to memorize it. You will get these slides afterwards. So
on my computer it worked well. So hopefully on your CEE it will be work well as well. Basically the upper line stands for the US. The bottom line stands for the Eurozone. And here I think this is really important and in my view interesting. What will be then? In October, we had this scenario that both those central banks will be decreasing interest rates. There will be lower cost of financing. But since Donald Trump was elected as the US president, our view on rates in the US has changed. Donald Trump, he said that he will introduce lots of measures to support the US economy. Like, for example, cutting the corporate tax rate, the regulation, reindustrialization of the US, also closing for immigration to some extent, to this illegal immigration. And all of that will have an impact on inflation. And even when it was clear that Donald Trump will be again the president, the US Fed stopped with decreasing interest rates, although expectations were that they will again do it. And I think that's also the conclusion for that. If we have inflation higher in 2025 than expected further, that delays the process of cutting interest rates in the US. Or even it cancels at all. I would expect at this stage that it will be one cut this year, but perhaps it will be none. Well, and why I'm saying about the US so much for the CE, because that also is crucial for the ECB, and ECB is much more crucial for us here in the region. You know that trade wars that it's likely that will be there under Donald Trump presidency, and his administration will not be just towards China, it will be also towards Europe, towards the European Union. Hopefully not so much for us, for countries in Central and Eastern Europe, but if that is put in the one basket, then of course we could suffer from that. But from the monetary policy point of view, from interest rates, this is also the lesson for the ECB. At this stage, I would expect that this year ECB will cut interest rates 3 times or 4 times, rather 3 times by 25 basis points each, so going with the interest rates to 2%. But concluding those trade wars, concluding these protectionism measures, and still that Western Europe is not doing so good, especially the German economy, so the biggest economy, the one that is driver also for overall Europe. then perhaps it could be more aggressive with interest rates cuts to support the economic activity in this challenging economic environment. But still, you know, Donald Trump will be sworn in a few days, in 4 days. So hopefully we will know more. Right now, it's like more there are some various scenarios, but then hopefully in next weeks we could conclude more here what will be happening.
Okay, good. We've got around 10 minutes left, so I just wanted to drill down into the real estate side. So what some of those implications are of the macro picture for the real estate side, what you're seeing there.
Sure. Let me just skip so far those slides and go there. Those are the recent numbers that we have from investment markets and the latest ones. And I think it's really correlated also to the economic activity. It reacts quite fast. So on the far right of this chart, you have the latest data. And this time you cannot see what year it is. Okay, interesting. So this is 2023, and this is 2024, and this part is our forecast, because what you have here is just for Q1, Q3, this period of 3 quarters in 2024. So basically the conclusion is that what we already had in 3 quarters of 2024 was the same amount that we had in the full year of 2023. So I would say perhaps not brilliant, but also not bad, right? If we see our forecast that is reaching nearly 8 billion for the whole region for the remaining part of the year, then we see the increase. This increase will not bring us still to those averages that we have 5-year or 10-year average, but this is improvement. The improvement that we, as we talked, we've seen also on the macroeconomic side, but we see here. And what's more, here, of course, when we look into splits of particular segments, there are also references to economy. As you can see, recently we had this, and I have to apologize once again to you because colors are crazy today. Okay, here you have shares for Central and Eastern Europe. And what is very important, we wanted to compare a little bit averages in historical point of view, a little bit retrospective. So we went 3 years in the past, and the last one starts from 2023. So as a reminder, still difficult year, to the latest data. So 2024 from Q1, Q3, 3 quarters. And this stands for CEE, that stands for Poland. And we would focus just on Poland. Those latest data is that the part coming from the retail side, it improved. It improved, as I said, in line with that what happened with the economic activity, what was the driver for the economic activity. Industrial segment decreased, but I think this is not so much conclusion for 2025, because I would see that as an opportunity. I would see that that hopefully we reach that point, that external markets, especially German economy, reach the bottom. But nevertheless, this is also some conclusion coming for that what happened after the global financial crisis. That after 2008, 2009, we had an inflow of FDIs here to the region, not surging, but gradually it was inflow, because German, Western European companies were looking how to produce cheaper, but with a good quality. And here it occurred that the region uses EU funds, and also that the capacities, but also productivity is going up, and they liked it a lot. And I think this is also what is a conclusion from the past, that when there are crisis times, there are also some, not always, but there could be good times for Central and Eastern Europe gathering more production here. And this is also the conclusion from those geopolitics that are very important factor for 2025. Of course, we have still war in Ukraine. We do not know how it will finish. Donald Trump said that, okay, it will finish in 24 hours, but it seems that was already revised before he started his presidency. Of course, the question is that how it could finish, but if so, then it would be, I guess, positive for markets. Also, how those increased protectionism will impact. It will impact likely Germany, but in our case, in case of Poland and other Central and Eastern European companies, it could be a chance for us. Especially that China probably will also lose shares in global trade. Poland is gaining shares in global trade. Recently, it was 1.6% in total. Perhaps not so much, but it made us 21st position in case of all countries. And 10 years ago, it was just something like 1%. In Germany, for example, it is just opposite. It was 10 years ago, it was 9%. Now it is 7%. And imagine how much the German economy is driven by exports, right? So I would also see that as a chance. So I think that we have to use this opportunity. Not sure, Richard, if we have some more time, because I have a little bit to add.
You can sneak in that little bit.
Okay.
Grzegorz,
Okay.
yeah.
So just basically because I said about this household consumption as a growth driver for here in Poland, but also other countries in the CEE region. But what is the other part that will be a driver? Those are investments, fixed asset investments. So like public ones, infrastructure, railway, roads, and so on. We had a period that we had clashes, especially here in Poland and also Hungary, but Poland resolved it, right, with the previous government, with the EU, with the access to e-funds. We hope that the impact will come faster than sooner, but unfortunately 2025 will be this year. That was in 2024, investments were weak. And here also I put a chart here with just those RRF funds. So this what in Poland we usually refer to KPO as the one, but this is only a part of the story. As you can see, already Poland gets nearly 3% of annual GDP from that. In the second half of December, 1.3% of GDP was coming, and it will be supporting growth here. Also, it will be supporting switching more to digital economy, to green economy, to net zero economy, because those funds indeed, not only those ones, but from cohesion funds, which for Poland are from the new budget 76 billion euro, will be dedicated to that. And last part, if I may.
Yes, yes.
Of course, do not forget about risks. And unfortunately, we have a sick man of Europe, Germany. I'm looking at Thomas and his sad face. But we talked previously that indeed he also shares this opinion that it's not doing so well. For us, indeed, it's a concern because, like for Poland, exports to Germany are 27%, from Czech Republic they are even 29%. And those latest indicators that we have, they show, like for example, IFO or IFO Business Climate. It started to perhaps stabilize, but not so much. Still, manufacturing is doing not so good. Recent data for factory orders for November, that was a decrease of more than 5%. But on the other hand, retail sales increased by 2.5%. There also in Germany, the household consumption started to contribute to growth. Our expectation is that first of all, the figure for 2023, GDP growth for Germany was minus 0.2%. For 2024, my estimation is minus 0.2% again. But for 2025, 0.4%, finally positive, but compensating those results. And here, as you can see, this chart, it starts quite a long ago, just before the pandemic in Q4 2019. And this is this 100, how it was before pandemic, and how nominal GDPs, of course, in constant prices, changed. As you can see, the line on the bottom here, this stands for Germany. And as you can see, this line is 100. After those 5 years, the German economy is roughly, or a little bit, just above it was in the last quarter of 2019, 5 years ago. What about other countries where we are outperformer? Poland is with the red color. We are 12% above. And here my conclusion is not only that Poland is improving, but also that perhaps it's not resilience, but Poland and also lots of other CEE countries started to be quite agile and they adjust to this situation. So when it was this proverb, or we used to say when Germany sneezes, Central and Eastern Europe or even the whole Europe catches a cold. That's still somehow right, but perhaps it's just a sneeze also for us, not catching a cold, because as we can see here, it's this way that we still improved, having even domestic challenges, but still this economic activity is going up.
Great, really interesting. We'll pick up on some of this in the panel, and pick up also, because I know there was a chart around the changes in terms of capital flows, which you will see in the charts that we send you, but we'll pick up on that in the panel. So for now, thank you very much, Grzegorz. Thank you.
Thank you, my pleasure. Thank you.
And if you pop over there to change your microphone, that would be great. We're just going to reset this, and Thomas, I know you're not entirely to blame.
Sorry.
No, I'm still.
Oh. Oh, okay. They're not on the original. Somewhere. Okay, fine. So, Thomas, you're not entirely to blame for Germany. I know that. You're the representative of it. But so let's not worry about that. We know who we all are. Let's grab a seat. Here we go.
Richard, how many persons?
3 plus me. So if I'm going to sit at this end.
So I give this
Thomas,
one.
just so that then everybody who's watching it online will see you and not me, which is good.
Okay, super.
Great. Let's start just with some quick introductions. In fact, we've got one more chair than we need, haven't we, Fabian? So you move along. Let's start with quick introductions. So Fabian, over to you. Just a brief introduction of yourself and FLE.
So yeah, I'm leading the investment and M&A department at FLE in Vienna. We are part of the LFPI group based in Paris. We are the local asset manager. We currently invest in the DACH region and in CEE. Have grown massively in CEE, especially in Poland over the last years. Currently we have 1.2 billion under management. We have a very efficient team with only 13 people. So if we look at an investment opportunity, we really intend to buy it. We have an evergreen fund that is intended to grow. We sold some properties, 8 properties in Germany last year, and have grown in Poland to quite some extent. Currently buying a property in Poland, and yeah, are very positive to buy more here in Poland. And yeah, same coming along with this presentation we just had. We also, I mean, this is also what we present in front of our investors, is the GDP growth, is that what we see, tenant demands, how our success story went from asset management in Poland. So we are very positive for the
Okay, good. Well, that's a positive take to start with. Fabian, excellent. Dorota, just a quick introduction of yourself.
Once again, good morning. I'm Dorota Wysokińska-Kuzra. I'm from Colliers. Apologies. I'm heading the corporate finance and living services. Corporate finance are different debt and equity structure toward different asset classes, and living is living, so that's my main area of expertise.
Great, Thomas.
I'm Thomas Kechele. I'm heading the German branch of M&G Real Estate. You wrote partner. This is a bit too much of honor. It's just heading the branch. and out of Germany, so out of Frankfurt, we are also managing CEE. And the focus here is clearly Poland, where we are invested, but solely in logistics.
Okay, so let's start with you, Thomas, if we can. And do let us know if you can't hear us, and we'll try and bump up the volume if needed. Please do. Difficult to hear. Okay. Or come and sit next to me here. We'll do it. Is the alternative. So Thomas, let's just pick up on that. I guess from the presentation there, encouraging signs in some ways in terms of what we're seeing. You're obviously there in Germany. So are you seeing, irrespective of the market, I suppose, from a real estate perspective, are you beginning to see opportunities there? Are you beginning to invest? Are you still divesting? What's the situation?
Well, the thing is, well, I'll try to speak up a bit. The situation is that the window of opportunities is, I think, Germany as well as especially we talk about CEE today, is still open, but it's about to close simply because we saw it is GDP growing, so Poland never fell in this hole, what they normally have done maybe a couple of years ago with the dependency to Germany. So they are more independent in the meantime. You see the opportunities, you see, but also still the gap of yield when you compare it to Germany. So this is still there, the legendary 150, 170 bits. I'm talking about logistics. There's other asset classes that we also find extremely interesting, mainly everything that holds a bed. But today in logistics, yeah, there is opportunities. We see the rents are more attractive. There's a reason to go to Poland when you want to operate logistics. You have the two drivers. This is nearshoring. This is online retail. So you saw consumer spending is growing, so the people have more money to buy, which drives, of course, the Amazons and the Zalandos of this world. And on the other hand, what's the reason to go to Germany with bureaucracy, high energy costs, and a few other obstacles when you have basically the same environment, less bureaucracy, good and well-skilled labor force in the meantime, because this is a huge driver in logistics in particular, when you can go on the other side of the border and do your business from there. And we see a lot of companies going east, not only in logistics, but also in production. There was a huge turmoil when we heard that Miele, a legendary company in Germany, moves at least parts of the production from Germany to Poland, to Łódź. And also Mercedes-Benz, when they say we want to spend $1 billion to expand our plant in the construction plant in near Wrocław. And this is perceived as a real game changer in Germany, because we were the mother country of all industrial production, and all of a sudden they go to the east. What a scandal! And but there is a reason for that. There's a reason for that. And with the production, we saw a few numbers that speaks maybe a bit against my speech now, but in principle, it is a move visible from west to the east. And with this, all the other factors are moving with them. So logistics, but when you have logistics, you need also resi, you need this and you need that. So the growth you see basically in every aspect. And there is shortage in some aspect, in some segments, not in logistics, because we have, of course, some very active developers in Poland that caused now recently a bit of an oversupply, but I'm sure this will be absorbed during 25 and 26. And then we have let's say, a good and decent investment environment in Poland, my opinion.
Okay, good. Dorota, it'd be good to pick up with you. We saw some of the sort of numbers up to Q3, for example. Do you have a sense of where we're headed in terms of Q4, a sense of where those numbers are coming through? It was very interesting for me to see some of the deal volumes in this region, and Poland in particular, have been huge, where it's been very difficult to get deals away, perhaps, of that size in other parts of Europe. They have been happening here. and in office, but also significantly in retail, which is actually much ahead of what's happening in the rest of Europe, interestingly. But so, I mean, interesting to see those big deals. How do you think that's affected where you see the market for 2024, and what do you think that means for 2025?
Yeah, thank you. Thank you, Richard, for this question. So I think some of you already know we have preliminary numbers for 24 in terms of the investment volume, and we surpassed the 5 billion euro in Poland, which is actually a very, very good number. I think in the middle of 24, or not even to say at the beginning of 24, nobody was even expecting. Just to remind you, 23 was just 2 billion euro, right? And now we are at 5 billion euro, so it's more than 2.5 times, which is actually a great result. And of course, this is probably not like it's a great picture, but also we have to take into account that there were several big transactions involved into it, 2 major retail transactions, 1 major office transaction, but also, you know, few big portfolio of logistic assets as well. Few single sales of both offices and logistic. So what I would like to say is basically that it's really a good number, which consists of several transactions. It's not just one transaction which makes 2 billion. I mean, there were several transactions, which for me is clearly a sign of the liquidity which are so much needing. And of course, we would like to be more. I mean, in good years, we had the number of even 22 or 6 billion, just to give you a sense. But in best times, it was even 7 billion. So we still are lacking, you know, 2 billion euro of transaction to get to the best years. But it's a really good sign. Also, what I would like to tell you about these numbers is that there are several transactions which are not included in those numbers. A lot of joint venture or capital structure would happen actually on the market with foreign capital investing into companies on a holding level in terms of either taking over shares or taking over bonds which have been issued. They are not really in this number. So, of course, we would like to see more investors, we would like to see more capital. But I think if you look at the numbers and number of transactions, I mean, it's pretty good. So this gives me really good hope for 2025, especially when I'm talking to my colleagues from more like western part of Europe. They clearly saw already a movement in terms of transaction, in terms of investor interest. Also the capital raise on the investment fund management is going better on the western side. So this is clearly the trend. I mean, we as Poland, we as country, as a region, we are always lagging a bit of behind, but we are getting there, and this is really a good sign.
Okay, good. And Fabian, you mentioned that in a way, Poland CEE for you ticks a lot of the boxes in terms of your investment strategy. How do you compare those? So if you're looking at let's say you're looking at Warsaw versus Prague versus Budapest. How do you see those? What are the differences? And when we're looking at CEE, how do you see particularly Poland and I guess therefore Warsaw within that perspective?
So if we look at Poland, we invest in Warsaw but also in regional city. We did this in the past and we will do this in the future. When looking at Hungary, we invest only in Budapest and the Czech Republic in Prague. This limits, of course, the opportunities we have. Prague has always been, the prices have been much higher than compared to Warsaw, and the product is very limited. We have been investing in Warsaw since 4 years now, and we are quite happy with it. In regional cities, we are a bit on the break when it comes to office investment. We see that the market are not that liquid at the moment, but for alternative investments, and we strive to diversify our portfolio much more, which we already did in the past. We bought cash and carry markets, we bought warehouse properties, we have a hotel in our portfolio. So we would like to diversify our portfolio, and looking for 2025, basically our strategy is very constant. I just updated our investment profile for 2025 and basically just changed the year and nothing else. So there's no big change for us. We were buying office buildings also during COVID. We bought office buildings in Poland also when the war started. I mean, during COVID it was a bit of a different experience because I visited a lot of properties which were completely empty for months. So this, I think this whole home office discussion now, home office is there, but people are happy to come back to the office. It's nice to see, for example, talking to Piotr, that he's so happy to move to a new office, stuff like this. And also I think employees are happy to come back to the office, and this we see also in our properties.
So you don't see the office apocalypse, end of office that we've seen in the US, and I know that's talked about a lot and exaggerated certainly when it comes to European markets, but for here, specifically Warsaw, you're seeing office as a big opportunity still.
Yes, I mean it's a changing environment. Offices in B, C locations, they struggle a bit more than people want to go more to A locations, more to the center or CBD. But still, I mean, you need to have a clear concept for B and C locations, and you could still fill properties up, but this is more difficult, we think.
Okay, good. And Thomas, just in terms of the flows of capital, in general, less Polish capital in this market, but increasingly seeing more regional capital coming into the Polish market. Do you see international money, the big institutional capital, first of all investing back in their own markets and in the kind of core European markets before venturing to Poland, Czech, and then beyond?
Yeah.
And if so, is there a timeline on that? Is it we're going to be looking in 2025 and investing in 2026, or what's your sense of that?
Well, for us, it is we're constantly looking. So we are looking for opportunities. So Poland is on the agenda to a limited extent, I have to admit, because of course the fund allocation is very strongly limited to allocate into certain countries. And still, Germany, France, for us, is the key countries to invest in continental Europe. But we see inflows in our funds coming again after there was well, everywhere. I don't know. We were happy and lucky that we had no redemptions, not of a bigger extent. So, but we see inflows coming. We see also activity in the investment market, and with that, of course, this money needs to be allocated in certain jurisdictions, and there is Poland on the agenda, of course, for the reasons that we have discussed earlier.
Okay, good. And Dorota, I know that part of your brief also covers living. I mean, the living sector, not part of everybody's brief is living. So, what are you seeing here? It'd be interesting to pick up on that, particularly here in Poland.
Mm-hmm. Yeah. The fundamentals for living are, I would say, excellent. When you look at especially when we talk, I mean, both residential for sale and residential for rent, or student housing, or any type of, beds type of, properties, the fundamentals are there. So on a resi for sale, you see really that the biggest stock listed developers, they actually has increased their sales volume in comparison on the year to year, so 24 to 23. There are several developers who are maybe a bit of behind in terms of the sales path. One of the reasons, of course, is the promise of the government to introduce the 0% mortgage. So some of the demand stopped waiting for this introduction. That's not going to happen, so I think that this demand will somehow come back to the market. So residential for sale is really doing very well, especially when we look across the Europe. On the residential for rent or student housing or co-living, those rental projects, if you look at the operational numbers, they are actually excellent. 100% is let. It's even difficult for you to see a kind of flat in those buildings just to see how it looks, because it's just fully let. and the biggest platforms on the market which already have a scale and already are somehow established, they're even able to generate double-digit net returns. So I think that's really excellent, right? What's a bit of a challenge is the transactions. There are not so many platform transactions. There are no platform transaction yet. Hopefully some of the platforms will be sold this year, maybe, because I think that's really what is missing is a kind of benchmark price for a lot of investors. So like when we discuss with investors, I always hear, okay, so show me the comps, what will be the exit yield? And of course, we are calculating, we are proposing something, but eventually it's always like, okay, but no transaction really happens. I said, yeah, no transaction happened, but it will happen, okay. I mean, it's a great wish, but we wait for this proof, basically. This is, I think, one of the challenges for the investor, and the other challenge for the investor used to be, and hopefully this will change this year, is the currency. I mean, as you know, in Poland, the currency of the living sector is the Polish zloty. And it's not even about the high interest rate or higher interest rate in zloty in comparison to euro. I think it's about the hedging risk, which for some of the investors is just a no-go. But the good sign is we really, I would say, after we came back after the 6th, the first week was really like boring, if you like, yeah? But this week, I mean, it's crazy. We are getting so much, phone calls also from investors who are telling us now, okay, I mean, we have this Resi fund, which is now invested 70% in euro-denominated countries. Let's talk about Poland, because maybe I can convince my investment committee to do a transaction in zloty without a hedging, because clearly the hedging is killing the returns. I mean, at least today, yeah? So that's not gonna fly. So I think this element is a bit of missing. For sure, the decrease of interest rate in zloty would help, because at least the financing cost would be lower. On the other hand, the existing platforms, they are financing themselves in euro against the corporate guarantee, of course. I mean, it's not a non-recourse financing anymore, but that's possible. But again, for a lot of investors, I mean, you would like to have a loan connected with the income, right? So you would probably prefer to have a zloty loan against a zloty income. And this is what we are hearing from a lot of investors as well, yeah? And again, the hedging risk comes into the question.
Yeah, we would not hedge this. But
that's good sign.
Funny side fact, everyone talks about the Polish zloty.
Yeah.
And no one would ever lose sleep, for example, investing in Sweden.
Yeah.
But when you look when you compare the Swedish krona versus the Polish zloty, you have lost double the value with the Swedish krona compared to the Polish zloty. But everyone is concerned about the zloty, so therefore it's about, let's say, the amount you spend, about the share you have, and then you can handle this also without hedging. This is
no, exactly. So I mean, it's great to hear, because that's actually in line what we are also
you see
hearing.
I'm a fan.
Yeah. No, I know. We are discussing.
Sometimes
this,
I have to convince the guys in London.
I know that's a bit more challenge, I guess. Yeah. And that's the
or I need to get somebody Swedish on the panel.
Exactly. Just. Yeah. So I hope that because even coming back a bit to the transaction volumes of the 5 billion, like 1/3 was office, 1/3 was retail, of course, because also of those major transactions we had, of those two NEPI transactions. 25% was industrial, which does not mean industrial is doing bad, it's just, the retail numbers are slightly higher, so in terms of the split, the industrial split went slightly down. In terms of absolute numbers, it's still above, it's close to 1.3 billion euro. And then the remaining part is the residential, which is less than 400 million euro, which is basically a very good number. But I hope maybe this year we can also really increase this number. And again, there are several good good platforms already on the market. Some of them probably would welcome fresh capital. So maybe something will happen in this area as well.
Okay, good. And senior living, is that something that you're looking at as well, Thomas, or student or living, PRS?
PRS, yeah, PRS and living. PRS and student housing, sorry.
Student housing.
Yeah.
And also potentially in Poland or more in Germany, or?
No, well, everywhere. But
everywhere.
In Poland as well. Poland is also here very interesting, because when you see the number of foreign students, for example, is growing. And if you come from abroad, the least thing you want to do is discuss a lease contract in Polish language with a grumpy old man in Warsaw. You want to have an operator where we have a clear contract that you can sign, where you know you have your room when you arrive. And the stock that we see is outdated, often outdated in Poland, because with the Netherlands, for example, asking double or 3 times the student fee compared to local students, and with Brexit and so on, to a certain extent, it's still correct that Poland offers the most English-speaking university path in Europe. So therefore, still after
it's
the Netherlands
1,000 English taught courses.
Yeah.
I'm not sure even
Yeah,
if in Netherlands we have as many.
The Netherlands, I think the Netherlands have a clear direction of you want to study there, you have to speak Dutch.
Correct.
And therefore, Poland gets to a certain extent, whatever, swamped with foreign students, and they need accommodation. And therefore, I think there is an opportunity to have a closer look here. And with normal PRS, well, I think it's fair to say that it works differently than in other jurisdictions, because normally you lease smaller apartments, fully furnished, all included, and from one year to the other, the rent increases by 30%, which is attractive for an investor, but not always for the tenant. So you have to live with, let's say, other ways of leasing versus renting these apartments, but it is less than 5% at the moment, so this is a growing segment, and also this delivers opportunities, but it is still in hand of, well, huge platforms, and this is basically what you need as a foreign investor. You need somebody who operates these apartments, because otherwise you get maybe lost when you try to lease these resi properties yourself. So this is what you.
But I think this is also changing, because I mean, one hand you can outsource this to companies like ours. Just to give you a sense, we are managing, which means managing and leasing 2,000. Of course, only us. Colliers.
Yeah.
So we are managing 2,000 units. So before you make the decision, an operator, not operator, or for the long run, you can use companies like us. You can use us. So we have already this experience. But also there are several investment fund managers or new operators, which I think are pretty well equipped to do this job. So I think this will also change, because of course the major platforms, they have their own operators. I'm fully with you, so you would not use them unless you do a kind of joint venture deal with them. But basically I think that's going to change also in a positive direction. So I think this will be also covered for.
PRS is also a rather young asset class in Poland.
Yeah,
so
no, absolutely.
Traditionally, Poles is a let's say is a country of property owners. Small apartments, but basically they own their property rather than renting. I think this changes to a certain extent.
Correct, but again, just to finish it, the institutional market is really new. Yeah, it's just developing, etc., and that's a good thing. But we have the private rental sector, how we call it, which basically means
the grumpy old man who rents out his apartment directly.
But sometimes also new apartments. What I would like to say, of course, I mean, there's no question, I mean, institutional rental has just more benefits. But the idea of renting is not a new idea in Poland, which actually proves also that the current platforms, they are 100% let, right? So, but yeah, basically we are not like Germany. I mean, the occupancy ownership ratio is still 85%, not like 50% on average in Germany. So you're right, absolutely.
We've got 5 minutes left in this part of the discussion, so I just wanted to pick up on I guess where you're seeing the opportunities. It's been interesting to see over kind of past years, if you look at the PwC ULI trends, that living was a very large part of that, including senior, including student housing. Now you're beginning to see infrastructure, new energy, data centers, those kinds of things beginning to top the list, and often that is a sort of indicator of where some of the opportunities are going, even if those opportunities are small at the moment, but just a signal for the market, I think. So How do we see that? Do we think there are opportunities in some of these smaller sectors, whether it's self-storage, data centers, those kind of areas? Fabian, what's your view?
I think what institutional investors like currently, so we do is if it's a long lease, if it's a triple net lease. So I think there are interesting sale and leaseback transactions coming this year and have been last year. This is something where investors like we could step into the market with smaller tickets, smaller warehouse buildings, maybe also buildings where you can have a clear ESG route. For us, it's not, of course, it's a big part of our investment that ESG, what kind of ESG boxes the property ticks, but it's not the main part. So if we can have a clear ESG route, also with our advisors, we could also buy properties where there is an improvement possible with a certification, with bringing it to another high energy level. So these properties, I think, are interesting for investors that don't look for the big mammoth investments. I think investments with a sweet spot of 10 to 35 million in this range.
But you mean on data centers or
self-storage? In general,
in
like
general.
with,
Those new.
With data centers, we would also buy a data center. We looked at quite a lot of possibilities, but it's a very specific product.
It is.
And it's very tenant specific. What is nice there that you have a nice long lease. I mean, even longer than 15 years is possible here. But it's a very specific, tenant-specific property, and we are really a long-term investor, so we calculate our IRR on 10 years, but some properties we have since 15 years. So if you hold then the data center for 15 years, a lot of changes will be for sure needed. The market and the needs of the tenants, they change constantly. So it's a very specific business. If you're an expert in it, I think it's a great business. If you're like, if you have, like we do our fingers, we have it in a lot of target countries with a lot of target assets. We cannot sit in our office in Vienna and be so arrogant and say, okay, we are the next data center hero. So this would be a learning process for us, but ticket size is also for us quite big.
The big data centers, right?
And Dorota, what's your take on that in terms of both the opportunities in general and also how you see some of these alternatives?
No, I think in terms of opportunities on a Polish market generally, I think there will be really good opportunities in logistics. So no doubts, there is also fundamentals here in the occupier market. It's still very, very good. I think still offices would be a great asset classes, especially when you're looking at Warsaw, and I think the recent transactions also prove of it. I mean, I'm looking, Marek, at you. I mean, you guys sold 3 office buildings in Warsaw last year, right? So basically, I have no doubts that offices is a kind of asset classes here which is doing well and will be doing well. Of course, there are different asset classes. Some of its asset classes maybe need some kind of repositioning, but generally as an asset class, I have no doubts. Residential, I mean, we talked a bit about the fundamentals, so I have also, I mean, I will not repeat myself. I'm a great believer in both senior housing and data centers, and the reason for this is, again, fundamentals. Senior housing, we have aging population, so that's something which I have no doubt is just a matter to adjust to the local social environment, because it will be very much different from country to country. It's like a bit of like living. I mean, you have general pattern and general trends, but then you have adjust to the local market, and especially in living sector, I think that's something you have to adjust to the local market. And the same is data center. With the AI revolution, we are living it, because I have no doubts we are living in an AI revolution. With the demand for data storage, and also connected with the cybersecurity, I think that's what we should really remember. the demand for data storage, which means for data center, will be enormous. And just to give you a sense, I mean, like 15 years ago, all of us in our offices, we had the server room. You remember the famous server room where we had to do like a strengthen the floor just to put the big rack on the floor. Then everything was outsourced to the cloud. So of course, data centers with those big clouds are doing very, very well. Of course, there are some challenges in terms of requirements for those big cloud operators in terms of the data center plots, etc. But now what we see is that the companies would like not only to have their data in the cloud, but maybe they would like to have like a copy of their data in a physical server again. But the server will not be put in probably on the office premises because it's just too expensive. It's just different, way of thinking about the offices. So they would require those smaller data center with, with different type of tenants. So again, not those hyperscaler, those Google, Amazon clouds, etc., Microsoft, but rather, again, for companies. And I think these trends will come. But probably that will be still not next year. I mean, companies like you guys, you probably will not do any investment in this type of product because again, you have to see more products like this. And just maybe because probably we are on a closing note, so maybe a kind of closing note from me. We used to learn that real estate is location, location, location. For me, the definition should be changed. Real estate is location, it's timing. Therefore, I'm saying data center senior housing is timing and a bit of luck, I would say, yeah, or hard work, yeah.
With a crystal ball.
Or crystal ball,
yeah.
or crystal ball.
Good. Okay. Last one to you, Thomas. In terms of opportunities, where should these good people be looking?
Yeah. Well, I can principally echo only what already has been said. So it is logistics in Poland. It is resi, all kinds of, and I include here explicitly also senior housing, because when you see the demographic factor, when you see the costs of, well, not only nursery homes, but also senior living in other countries, could be also an attractive trend really to have it in countries where labor force is a bit cheaper, where everything is a bit more affordable. Data centers, yeah, but I have to admit I didn't see any data center deals so far in Poland. So as you said, there is no deals.
Not yet.
And then is always the question about the security of energy, providing the necessary energy to operate it. And experiences here is that Poland, in huge parts, has the same problem as Germany. In huge parts, that it is not the problem to develop such a data center, but it is the problem to provide sufficient energy, constant energy. And this is what needs to be investigated further, at least from us, because we are never front runners with these kind of, let's say, new and sophisticated asset classes. Yeah. We are looking at the market, and then we decide if it is something for us.
Yeah, and interestingly, we did a session on data centers in London, and then one at Expo Real. And there was even a change between those two sessions, which were 6 months apart, in terms of the thinking that was going along with that. Exactly to your point, Dorota, that yes, of course, there's the big hyperscalers that require a great deal of knowledge to operate. But you've also then got ones where you're doing much smaller ones, particularly for the German SMEs, smaller companies where they need a space in a data center. And so it's a bit like you have that section here, you have this section here. So a very different model beginning to develop for that, which is interesting to see, I think. And in terms of the financing side, Justina, who would have been here but unfortunately has COVID from Berlin Hip, so wisely decided not to come and be a super spreader for everybody here. It would be a bad reason to remember the event. What she was also saying was that the financing there is there in principle, but also one of the interesting challenges for this market will be how we can finance that transition as well, picking up your point there, Thomas and Fabian, about the transition from a brown asset to a green asset, which brings us very neatly to the next part of the morning, which is just going to be a quick kind of 35-minute run through what we're going to see in terms of the transition. So we're going to be very effective, and we're going to say thank you very much to our great speakers here and welcome our other speakers. Thanks very much. And if you swap over microphones here, whilst we're having a quick swap over of microphones, I just wanted to check as well with where are you, Soren? Are you here somewhere? There, great. Soren, let's start with your view. Just a question to get everybody started, I think. Thank you, guys. Yeah.
Who's the last speaker? Richard?
There. Yeah. Here you go.
Which speaker also?
Sorry, let's start with you, just in terms of, I suppose, setting out a challenge, both for the room here, but also for the speakers to come. What's your sort of take on this?
It's not so heavy.
Soren Olsen, and I'm with NREP, which is the largest Nordic real estate investor. And we also invest in logistics and in the living sector. We are widely known for being one of the most forward-looking real estate investors when it comes to sustainability. We also recognize that while we're big in the Nordics, we alone cannot make a change. And our company has been very fortunate to be selected as one of only 15 companies globally to participate in science-based targeting initiative. And for those of you who do not know what that is, you can Google it afterwards. Science-based targeting. It's an organization that is active in trying to establish methodology and targets for reducing greenhouse emissions globally, meeting the Paris Agreement. And the real estate sector has not been established yet, so our role in participating in that is to actually be a sort of a testing rabbit and trying to help developing methodology and establishing targets for what they call the building sector. And this is something we joined just 12 months ago. But going from there and being part of something that is a new, relatively new global initiative, and then bring that back to Poland is obviously different. We appreciate that's perhaps one of the biggest challenges we have in this country, being an investor in the logistics sector and in the living sectors, is that we cannot do it on our own and we cannot sponsor it on our own. We see a trend that lenders are being much more keen on sustainability solutions and green buildings. We see also growing interest like ourselves coming from investors and from selective tenant groups. But nobody wants to pay for it. And well, we are investing a lot in this ourselves, and we also see some very forward-looking tenant groups, in particular in the logistics sector, who have a very clearly defined agenda, which is great. I think one of the challenges we see in Poland is when will legislation help us to take this a step further? And for anybody who's working in this sector and have experience with PV panels, solar panels on the roofs, and how you deal with the capturing of solar energy, transforming that into electricity and actually being allowed to use that electricity, will know that legislation puts sort of a stick in the wheel in order to move forward faster. When it comes to reducing CO2 emissions and greenhouse emissions, we need to move much faster. For those of you who follow the media, you know that we are already way behind. And last year was a horrible year for the planet as a whole. So sort of throwing that challenge out is what can we do, if anything, to actually better engage with municipalities and the government in this country to actually let them help us to help changing the situation that we have today, where we want to do more, but we are somehow limited, if not by capital, then certainly by legislation to take
the next leap forward.
Okay, very interesting. That's a challenge for the speakers now. If we could take... And interestingly, that's a challenge, obviously, that is not just here in the CEE region in Poland, but also across Europe as well. Thank you for that, Soren, that's great. Guys, if you could take a seat, that would be good. And what we're going to do is just pick up on a couple of points. We've got different perspectives here, and then I'm really interested, and then I'm going to open that up to everybody else, because like Soren's point of view, I'm really interested to get your point of view, because decarbonisation is certainly going to be a huge topic for anyone who owns assets or is investing. So it'd be interesting to get your views on this as well. Alexandra, maybe let's...
Alexandra is there.
Oh, sorry, Alexandra, yes. Let's start with you, Isabella, just in terms of the, I suppose, pick up on that point from Soren, but also how are you seeing where we are at the moment in terms of this process of transformation? What are we doing? What do we need to be doing? How do you see that 2024 versus 2025?
Yeah, hi, hello there. I'm a sustainability expert for almost 15 years. I haven't put ESG on my footnote just last year. There was a huge mess, there was a huge fuss on ESG last year and still being continued this year. I hope the situation with the whole topic will stabilize a little bit more. I can see the investors can now easier understand what ESG is, what is ESG for the tenants, and what is ESG for the real estate. They can now easier evaluate, or there's still much to do on the evaluation of assets that are sustainable, but it's easier to understand what ESG or decarbonization mean for an asset. Last year, it was a jumpy, I mean, ESG was jumping out of the fridge, right? There was a huge mess around this one. But now here in Colliers, we can support our clients with ESG, due diligences. We can see that during transactions, the topic is vital. Okay, it's not a deal breaker, right? It's not something that, that will stop the transaction, okay? But it is something that investors question on, and it is topic being raised. The whole topic about energy in Poland, the cost of energy, the decarbonization of assets was also a hot one, and it will continue this year. What else? The biggest interest in ESG topic was in offices. We did a lot of services for offices in this regard. Also in logistics. The small amount of clients came to me from living and from... I was surprised that even small retail parks, they are interested more and more into ESG topics. They start to invest in this. They see the opportunity, they see there is a value there. For the next year, the trend, I think, will continue. The trend of ESG and the sustainability, because there is no way back, right? Even if there is a Trump, even if there are some, maybe there will be some changes in the EU legislation that Ursula von der Leyen mentioned, and this February we will know what the changes are there. Even though the trend is there, we have to continue this path. It's the only one path, really. The energy topic will be continued. Last year we did a lot of energy audits, so we tried to support our clients with the decarbonization path according to the CRREM path. But we did a lot of it, and I have such a kind of feeling that sometimes those analyses are only put on the shelves and into the box, and nothing really happens. I know there's a huge problem with incentives. There are no incentives for investors that are keen to rebuild their building, rebuild. I mean by repositioning, by rebuilding, I don't mean only the fit out of the lobby. I mean the total rebuild of the building to decarbonize it. So there's still a lot to do in this regard next year.
Okay, good. And let's also pick up with you, Agnieszka, if we can.
You can.
First of all, just good to introduce yourself so that then we know what side you're coming from. And then obviously circularity is a big part of what you're looking at as a way of the transformation. So let's just pick up your perspective on this.
Okay, so first of all, I'm representing NGO sector, think tank, so we do a lot of different, research, analysis, also stakeholder relation around sustainability, sustainable consumption and production. But what I want to say now, because I'm not so enthusiastic anymore about this whole issue which is going on in Europe. I'm sorry to say, I'm very pro decarbonization. We have to do this, yes, we have to change our business model. But I think that Europe goes not the right way, I think. What is my gut feelings? First of all, ESG, yes? I think now there is a report that companies spend more on the reporting than on the change per se. So actually the one who is gaining is a consultancy company. And actually we lost from our side, what is the real purpose of this ESG, yes? They just only focus how to prepare a beautiful report, not really how to change the modus operandi, yes? And this is, I think, a little bit of mistakes. I think that at the moment Europe is over-regulated. And actually we're losing our competitiveness, yes? Because there is a lot of new regulation which make a mess, actually. And I think many of you are completely lost in this all directives, regulation. The national legislation are lost. They don't know what to, implement, how, whatever. And I think what is lacking, it's really this fiscal change, yes, the tax change, which help us to pay for that. This is what the guy just said. There is actually no one who is willing to pay for the change. And I think this is really needed, it's the fiscal change, which is not happening, actually. There is like a lot of different things going on. On the other hand, we have like this all renewables, e-mobility, which makes Europe dependent mainly on China, actually. Still, we're losing our thread from our hands. Have you heard about this big company, Northvolt? This is the company which actually not build but assemble the electric batteries for the vehicles. They get a lot of money from European Commission. The commissioner was in favor of this company. We can build our competitiveness on that. So there is a lot of public money go to this company. They bankrupt completely because there was no managed to really produce the batteries. They just assemble. They all the time was relying on the other economies, like Asia economy. So I'm sorry to say, but I see that we a little bit on the descended road as Europe, yes? And I think Asia will take over now the lead over there. So I'm not very optimistic, but this is how I see that, yeah?
Okay, all right, different take on that from Sarum, which is interesting. Joost, obviously coming from a very different perspective,
yes.
From the energy side of it. So quick introduction from you, and also I guess your take on, in general, how you're seeing this sector.
All right, Joost Leenitse, I know a lot of you. From Verisol, we empower your green strategy by shamelessly integrating sustainability with financial value by delivering self-energy producing social responsible building. We work for Colliers and other majors. And I have to say, what is saying at this moment is, let's start with the closing of the end. Real estate is location, but also be the first and have a little bit luck. I think if you look at to the ESG perspective, location is always to do renewables. Yes, in Spain or in Italy is it much more cheaper than do renewables in Poland because of the climate and the weather conditions. If you see to be the first, what Sørensen is saying, there's a lot of happening. And who's going to pay? The landlord has to pay. And there is no IR on ESG. Believe me, there's no IR on ESG. And if you're going to sell power, you get so much more problems. So as a building owner, keep it simple, because then I'm going to you. It's not about all the reporting, it's keeping it simple. Just like buildings, they are simple. You need a toilet, you need an elevator, otherwise you cannot rent out an office building. If you see for ESG, the big part are the E&L buildings. And they have space to build a renewable energy system. With maybe small windmills, with solar, with battery systems, and absolutely efficiency. And make another work protocol with your tenant together. That's the new S stepping in, being together in a companionship together. You make your building ESG proof, and that's the G stepping in, being good governance. So it's not talking, it's good governance. And over 3 years, you as asset owner will be 100% headcount responsible. So you get legal suits. You get punishments. Attorneys will not sign your financial financial reports anymore. So it's really getting hard. So be the first to adapt. Like Sorensen said, more and more tenants want to have it. If you also read the report of Panettone, how many tenants are now adapting the new ESGs and want to have this. So it's changing a lot, and yes, we need to do it because we see it on the climate.
And yes, picking up the point there from Agnieszka about battery technology, all of that. I mean, interestingly, I was at, similar to Northvolt, there was a company called British Volt that was designed to be starting in the northeast of the UK near Newcastle, but actually collapsed because of lack of investment and various other things, because it was trying to compete with China, which it was never really going to be able to do. But I was then visiting the successor to that, which is called Titan Volt, about the kinds of batteries that you can then have safely in both residential homes, but also in industrial and logistics, in offices, that then will take the solar, be able to store it and use it, or alternatively, will be able to take power at night at cheaper rates for residential, and then you can use it in residential during the day, so that it's another way of approaching affordability and social value in terms of the residential side, which I thought was interesting. But how do you see this? Is China going to be the solution for the moment for Europe for these things?
I hope absolutely not, but at this moment I think 90% of renewable energy products we need to generate is from China. That's really a pity, because we can also do it. The new types of batteries we are talking about, the slow ones, are really great for night compensation, but for the industry we need much faster up and down time batteries next to in logistics or industrial properties with a C of max 0.5. So in renewable energy it's not, if you only go for the price, it's going wrong. You have to make a tailor-made solution for the situation and for the building where you are, and then it will stand longer.
Okay.
If I may add, because like in sustainability, we don't have like black and white solution. It is much more complicated. So it's not only solution to go one way. We have to look broader and be cautious, because sometimes the old solution are better than the new one, which we want to really invest all money and efforts. That's why, you know, it's very complicated and not the 0-1 topic.
So yeah.
Yeah, and there's some interesting things. So certainly from discussions we've been having as well, there's a view that, for example, because Poland has a large amount of coal-generated electricity, that therefore some of the institutional investors will be marking down Poland on that basis, because it's not green energy coming into, you know, from the grid coming into that asset. So you can make that asset as efficient as you want, but whilst that is the energy supply, it's still not going to manage to reach what's required, which is an interesting point, I think. Now, this is designed to be open forum for everybody. So I'd be interested to get other views from people as well. Anna, have you got views on this topic from an Invesco perspective or a personal perspective?
I mean,
I'll be disappointed if you said no now, but...
I'm not sure I fully agree with you on the fact that this is landlord who's going to pay for that. I think it has to be shared. I mean, the landlords and the investors are willing to invest reasonable amount of money, but in order to get to fully decarbonized buildings, it's a lot of money. And at this stage, no one's prepared to do it. That's the reality. And until the valuations reflect that future cost, I don't think there's any trigger or any willingness to do it. Yes. So so that's one thing. Obviously, there are practical items like you have a tenant in the building, you cannot do heavy retrofit, you can do small stuff, which we have passed this already. We've done what we could have done in our buildings, but then there is a bit of a wall. And also, with the technology changing and better solutions in place in the moment, maybe some investors are thinking, okay, maybe let's wait 3 to 5 years if we have a long-term horizon, because there will be better, cheaper, more efficient solutions, rather than install enforce the roof of the old buildings and install the photovoltaics or do the heat pump, which is in our climate at least not super efficient. So from the investor's perspective, it's slightly different. But I agree on the point you said that investors, they are building the portfolios, they look at the carbon emission of their portfolios, and obviously having a building component always marks it down. So there has to be a super, larger premium, investment premium, financial premium to invest and have an asset which is heavy coal-based, rather than having something of a similar return, I don't know, in Spain, Portugal, or Egypt. So that's what we face.
Okay, interesting. And Thomas, are you seeing that the same way as Anna, or?
In principle, first of all, what I want to say is that any assessment, or a lot of these assessments of buildings end on the outside of the cladding. So what you said, that when you refer to district heating, for example, that district heating is produced by a coal power plant or so, this is normally ignored. So at least for what I can see is ignored. So, and also if somebody comes up to replace a heating system that is 12 years old and has a lifespan of 20, with a slightly more efficient one, for example, then you can have, for a rather long period of time, a less efficient heating system before you have really compensated the CO2 emission of producing the new one. So there's a few things that are not clear in this entire discussion, at least to me it's not clear. And when I hear that an EPC in Holland means something different,
No money.
means something different than an EPC A or B or C in Germany, then I see that not even this has equalized within the European Union, and therefore I wouldn't say I'm reluctant, but I'm hesitant to really start this trend toward. I fully understand that we need to do something to stop climate change, but the path, how we do it, for me, is not entirely clear. Not to talk about all these obstacles we have, tax ruling that you are not allowed to own the PV panels that produce the energy maybe. Then you have an issue with feeding back the energy in the grid because the grid is not prepared. There are so many obstacles still in the market that, well, I would almost say sit on your hands, the best option you can do. But coming back to what Jos said, at the end of the day, the investor is paying because you either invest in your property or you get a deduction when you want to sell it. It becomes illiquid to a certain extent because everyone is running in this direction. Maybe most of them not knowing what to do, but the bank's saying so, RESPI is saying so, you have to do it. and then you get a deduction when you want to sell. If you find a potential buyer, then they deduct it from the purchase price at the end of the day. So you pay it in one way or the other.
Yeah, and certainly in terms of the discussions we had a whole series of sessions around our impact journal, and one of those was also exactly to your point there with what are the investment managers doing in order to try and create that link between a common terminology for what people mean, so that then there's a reliability when you're buying something. You know that actually it means the same in Germany as in France, as it's in the UK. And there's definitely a working group who are beginning to informally do that. So if M&G aren't on that, then I'll also connect that, because I think I think you're right. It certainly is a barrier. Alexandra, it'd be interesting to get your view. The point around the reporting is quite interesting. You know, is everybody just reporting, but actually not doing? And also, I guess how you're seeing the transition. What are some of the challenges, I guess, between some of the other European nations and what you're seeing here in Poland, especially in CEE?
Yeah, absolutely. Thank you for that. I'm responsible for sustainability transformation here at Colliers, responsible for non-financial reporting as well. This is true. We're ahead of the major wave of reporting entities. But I also agree with Agnieszka that reporting is one thing and doing is the other. And doing, this is exactly what we shall focus on, because Poland is second in terms of most emission-intensive countries. So still only 30% of the energy mix comes from renewable energy, so we have much to do in this respect. And until now, the European Union has concentrated on the stick, not on the carrot, contrary to what the US has done by introducing the Inflation Reduction Act. So indeed, deregulation should speed up the process, but it would not stop this, because we know that the development of electricity infrastructure and the production units would require enormous capex. And I totally would agree with Thomas, who said that system heating is an elephant in the room, because we've noticed that so many entities concentrate on decarbonizing electricity while forgetting or just omitting the problem of this system or city heating. That's right. But there are technological obstacles to that to get mass solutions. So if you ask me what the major theme for the next year would be, I would say it would be radical pragmatism. Radical pragmatism to decarbonization, to sustainability. So I see our clients would be looking at the solutions that would have ROI. I think concentrating maybe and circulate around energy, consumption reduction, outsourcing green energy. So this would be the major theme for the next year.
And I haven't heard that phrase before, but I very much like the idea of an elephant in the roof, because that is far more dangerous than it being in the room. It's one thing being in the room, but in the roof, that's a real... You've got to have a very structural house there for that. Good. Be interested to pick up just on the circularity side as well. Agnieszka, what role can that play on a practical level for people here in the real estate side? So what should people be thinking about?
First of all, circular economy, it's based on economy, yes? So it should be profitable and it should, gain profit, and we shouldn't be afraid of. So this is the first thing. I think the circular economy also helps us to operate more wisely without losing the comfort of everyday life, and that's why I really in favor of the circular economy, because it's easier to convince people to go this path. Then circular economy is about changing the business model, yes, which, as I said, still should bring you profit, but you just start to operate more wisely, more sustainable. Look on the resources side, that is, we should manage it differently, yes. So I think there is a lot of different solutions, yes, when we go for the product as a service, yes, or different solution which a little bit shift, you know, the money sources or financial sources, but still it should be economically viable. Yes? So this is, I think, the heart of circular economy. It's not easy because we're still operating in a linear economy. That's why there is all, I think, financial incentives which is lacking actually for this many circular solution, which I think should be changed. Of course, procurement, green circular procurement could help, and especially in your business, I think it could be a great support for that.
May I add
Of course,
to this,
yeah.
that for the real estate, it's not so easy. We are at the entry level here on circularity because of our about our legislation. To be fair, because we cannot rebuild the building because of the spatial planning, because we cannot reuse the one door or one window of cladding, taking out of one asset into other. Whereas in Czech Republic, it's a bit easier. Skanska did it in Czechs, right? It's a different story there. Right here in Poland, it's still at the very entry level. We have to wait for someone to help us on this topic.
Yeah, absolutely. It's paradox because this legislation, one it's in favor, one is like opposite, and we are a little bit in the crash, yes. And I don't know, looking at deposit scheme system, easy thing to implement. We still don't have it yet because we all the time argue about it. So it's we are not easy market for that, I think.
No, and it's interesting that, you know, one of the advantages that Poland and the region has is that a lot of the buildings are new, and so are sustainable in that sense, and so the energy plays against that, which is an interesting point and wasn't really considered before, but is going to be considered for sure in the future in terms of institutional capital anyway. Looking at the region, that will be you know, one of the deciding points that they look at.
Yeah, we're going to hear a lot about PPAs and guarantees of origin this year, as guarantees of origin that we are using, investors are using, will be in the near future treated as greenwashing. So we shall all switch into PPAs. They will be treated by European Union because, for example, CRAM, the decarbonization paths, they treat only PPAs as the green source, whereas guarantees of origin are not, because they are being bought for a year only, and PPAs can be bought for 8-10 years. So we're gonna have this exercise this year even bigger than last year.
And what is a PPA?
Power purchase agreements.
Excellent, good. Just in case.
Yes.
Okay, good. And I think that's interesting. Will that affect potentially then people who are buying, you know, in China or in, you know, does that make a difference or no difference really?
No, PPA is buying green produced energy. That's the PPA. Okay, if you see to the total energy mix of usage, you can roughly say it's in every country different, because in Poland you have a lot of more heating because of the climate. So the part of electricity used by living is a little bit slightly higher than, for instance, in Greece. But you can say roughly say 65%, 70% is E&L buildings, where the usage of electricity is. Now, mostly of those buildings, they are the easiest to decarbonize by on-site renewable energy production. If you take that into account, and what you
this
did,
is simply because they have a large roof area as an industrial and logistics building.
On-site locations for plant and windmills, small windmills, or battery systems, you have the large possibility to build a renewable energy system. If you see it for offices and housing, there becomes a lot of complexity to get them decarbonized. Now, the best way to decarbonize is to do it by offset, by real ownership in offset. Now, you can do it by PPA, because guarantee of origin is greenwashing, and especially what I said, the accounting and reporting you have to have control and ownership. Now, you have control and ownership buying PPA because it's yours, or you have somewhere the office building has a forest where they produce the amount of decarbon what the building is using. But that are the only ways to do it.
Okay, good. Does anyone else have a view or something that they want to pick up on? If you do, I'm going to scan the room for around 3 seconds, which is as long as it takes me to say that sentence, and the answer is no. So let's just have a final round, just in terms of what do you want to see for 2025? Joost.
No, it is also said that ESG, like Anna said, every fund, every investor has his own horizon. But I will say, what also is said here on the table, it's time to act. You can discuss for hours, but it's simple. You have to decarbonize, and on the end, the investor will pay, or it's a brown discount, or I think if you see the new RICS blocks of valuation, that there is a higher valuation for a decarbonized building. Keep it simple. And also see it in your heart as good governance. Like Søren said, you have to do it. It's also for the environment. So what for environment you want to live in, like Los Angeles, it's all burned down. What's then the building value? So that's what I would like to say. Be meaningful this coming year.
Okay, good.
I just could follow up. It's less blah, 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 which we have a lot, around, and I'm a little bit tired of that, and more really acting, doing. I think I really look for some fiscal change which really make us, implement the real solution, and then we can see a real profit in that. So I think that's it. And also one thing it's a little bit also scares me because of this all conflict, yes. I think a lot of money go to defense sector now. So I think we still go, with the path of sustainability, but I'm afraid that it could stop at some point, yes, that more money go to the defense sector and then cybersecurity, etc. So that will be the kind of...
Okay, Isabella.
Hopefully next year we're gonna limit the blah 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 because of the EU regulatory may change. Ursula von der Leyen maybe ease our pain here, because I totally agree there's too much fuss on ESG. Let's focus on decarbonization, let's focus on accountable topics. This year also the new legislation according to energy performance certificate will come, EPBD directive, that will also ease our pain to check how the EPC goes in Poland, in Hungary, and in Germany, so we can compare those. So they are on the radar, and we are waiting for this. It should be around June this year in Poland. Still focus on energy will be this year, yeah, we have to do it. There's no turning back from sustainability and decarbonization.
Okay, good. So we will all be doing less talking about it and more action in 2025. As part of that, everybody who registered for this, and I'll therefore have your email details, I will send you and make it open for the next 2 months, our impact journal and platform, so that then you can have a look at some of the solutions that are there and pick up on some of those views, and hopefully that also helps drive some action into the market. And I think it will be interesting to see, particularly for Colliers and the other areas of the market, how we can help drive this and pick up that point about how valuations are reflected in it, which is more difficult and will be something that I think the industry will be moving towards in terms of how you reflect valuations, and therefore there is a benefit for both occupier or tenant and also the investor and asset managers for these things. And I think I'm going to be handing over to Monica. Is that right? For a quick, I'm going to say, well, I saw you there. It would be rude not to. I'd like to say Happy New Year.
Thank you. Happy New Year to all of you. Actually, I would like to say thank you, Richard, to be with us every year and do this summary, and everybody waiting for that. I've heard that you are having a challenging today, you know, to make exercises with the raising the voice, and I can just apologize for this, but we are moving actually to the new office the next 2 weeks, and we know that the audio video are not going to work. Sorry for that, but it's sometimes good to do some additional exercise, I would say. But I would like to already invite you for our new beautiful office in the Forum building, which is also Noblin. We have a last floor with beautiful terrace. Even if January we open next year, I promise you that. We will do some, you know, maybe blue wine then outside then. But thank you, very interesting. Thank you for the panelists. Thank you for the guests being with us. And then I wish all of us, you know, more optimistic, our great and fruitful year. Okay, thank you very much.
Great, and teas, coffees, food is there, so do please stay. Meet everybody, chat together. That's part of what this is about. The fact that we can meet is that we do. Thank you, Monica. Thank you to everybody. Thank you to everybody for being here. And if you can join me in thanking yourselves and the speakers, that would be great. Thank you, everybody. Thank you.
We didn't know that we didn't know this the audio.
No, I know, but when it worked. It was fine.
Yeah, everybody knew that this event, so I'm really surprised. And honestly, I come in and Marta, I met Marta that I don't come in because we are going to just go for the coffee. I left, you know, I left, it's okay. So sorry for that. But new office,
it's fine.
Richard, is really top of the top.
No, I'm looking forward to seeing the new
top
office.
Top of the top, you will see that. It's bigger, it's really,
So is it in Norblin?
It's close to the Norblin. The name is the Forum. It's close to Norblin.